If you've been following the news, chances are you've heard some headlines about the housing market, most of which don't tell the full story. It's true the market has been shifting, but I'm going to help you separate fact from fiction, bust some myths, and understand specifically what is happening here in the San Antonio area and help you navigate the spin on higher interest rates, where prices are going, how it impacts you, and give you some recommendations on what I think you should do next. So stay tuned. Hey there, if we haven't met yet, I'm Denise Ross with Keller Williams City View, and I absolutely love helping people make San Antonio their home, and I would love to help you too. Give me a call, text, or email. I would love to hear from you and help you get your questions answered, or when you're ready, help you get your process of moving started. The first myth that I'm going to bust today is that home prices are going to fall. I've heard a lot of people say that they're going to put their home search on hold, or they're going to wait to buy a house until home prices go back down. In order to get to the bottom of this, first let's review how the market here in San Antonio got to where it is. We're coming off of back-to-back years of about 20% appreciation in property values brought about by many factors, including an incredible demand for housing. The demand was for many reasons, including a major housing shortage. Simply put, not enough new homes were being built for many years in a row. This, coupled with the net migration that Texas has experienced, I mean, everybody and their neighbor's uncle has been trying to move to Texas lately. Add that to the super low interest rates, which made more people interested in buying a home. So that caused a buying frenzy, almost an auction type environment where nearly all homes were selling super quick for tens of thousands of dollars over the asking price. This was great for sellers, stressful and exhausting for buyers. And then the higher property values resulted in higher property taxes when the tax assessments came out. Then, in an effort to try to slow inflation, the government decided to raise interest rates. So as a result, the market has slowed down some in the past couple of months as far as the number of homes being sold. In the days of buyers having to offer their life savings, left arm, a year of Netflix, and a buffet of tacos in order to get their offer accepted are over. So homes aren't selling for tens of thousands of dollars over asking, but because there's still a deficit of homes available versus the demand, home prices are unlikely to decrease, but rather just increase at a slightly slower pace than what they had been. To illustrate my point, here's an article published recently in the San Antonio Business Journal that states that San Antonio needs about 65,000 more homes to be built in order to have a balanced housing market. Yes, there have been quite a few price drops on homes here recently in the San Antonio area. In fact, an article in the San Antonio Current in the beginning of July stated that San Antonio is now among the markets with the highest percentage of price cuts. People were listing their homes at their crazy number. Like, I would sell my home if I could get X dollars for it. Well, people would try it and they would get it, and then homes were being priced based on the ones that had sold for 50, 100,000 or more over the asking price, and not where they should have been when the market started slowing down, and now they're having to be a little more realistic. So let's look at historical pricing data in the San Antonio area over the last few recessions. You can see in the last 20 plus years, prices have never really gone down. The circled years are the ones with the recession. Even after the housing market bubble burst back in 2008, when some other markets were experiencing a 40% decrease in property values, you can see from the chart that even if you purchased at the top of the market in that year, that the next year your property value only went down a few $1,000s and quickly regained that back plus some. So if you are waiting for the prices of homes to drop, I think you'd better reconsider. The next myth is that interest rates are crazy high. Yes, interest rates have gone up in the past few months, practically doubled since the beginning of the year. As I mentioned previously, this was an attempt by the government to slow inflation. And the interest rates have slowed the sales, slowed the rate of people borrowing money, and knocked some people out of the market. Everyone who was sitting on the sidelines when the crazy buying frenzy was going on is now kind of having sticker shock when they look at what their monthly payment on a home is now versus what it would have been on the same price of home 6 to 8 months ago. Take a $350,000 home on a 30-year fixed mortgage at 3%, and the monthly payment is going to be about $1,686. Well, now with the interest rates at about 5.4%, the monthly payment is going to be about $2,078 per month. So this might mean adjusting the price range of the homes that you are looking at. While these rates are higher than what you would have gotten had you purchased a home last year or even at the beginning of this year, today's rates at around 5.4% are still a historically low interest rate. And in the last week, mortgage rates have had the largest weekly decline since 2020, dropping over 30 basis points. Interest rates could still go up, and you would look like a smart buyer buying today at 5.4% if interest rates would happen to go up to 8%. But if they go down, you aren't stuck at 5.4%. If they go down, you refinance. Now, myth number 3, the housing market is going to crash. Some headlines are generating worry that the housing market is a bubble getting ready to burst. Experts say today is nothing like 2008. Back in 2008, lending standards were very different. Pretty much, if you had a pulse, you could get a mortgage. A lot has changed, a lot of new laws and more regulations, and people are much more qualified. There hasn't been the rush of people getting these loans who couldn't actually afford them, as was the case leading up to 2008. People were much more qualified to get into the loans that they have today, and a bubble requires properties to be valued at less than what is owed. Most people are sitting on a bunch of equity in their homes, so we're not going to be having the wave of foreclosures that we saw back in the last housing crash. So now that we've busted those myths, here's the scoop on the market that we're in. The market is moderating slightly from what was record-breaking in nearly every way over the past couple of years. Sellers and builders could practically do whatever they wanted and still get way over top dollar for their homes. We're still slanted slightly towards the seller's market, but the balance of power has shifted slightly, and sellers no longer have all the power in the deal. Now, buyers have a lot more homes to choose from and not where everything is selling with 15 offers on each home within an hour. Builders who had long wait times and were even doing lotteries to see who could go into contract on a home now are offering more incentives, and some are even offering long-term rate locks, getting some certainty into the future. So sellers can still expect to do pretty well when selling their home. If you're kicking yourself thinking you missed the boat on selling your home, you may not get the 5 to 6 figures over asking price that you might have gotten, but you're not going to also have to pay that amount to get into a new home either. The economy here in Texas is still looking bright. San Antonio has had the biggest tech boom in the nation. The number of companies that this greater San Antonio area is actively working with to relocate or expand into the area is a lot and is approaching pre-pandemic levels. Maybe a continuation of the tech boom that Austin had a couple of years ago. San Antonio and the New Braunfels area had the second highest net domestic migration in 2020, and people are still coming here and not leaving. People have to live somewhere, and San Antonio is a very desirable place to live because San Antonio rents and housing prices are still some of the lowest in the state. What's bound to happen is prices are going to continue to rise as demand goes up. Here's the bottom line. No matter what you're hearing about today's market, let's connect. I can help you understand the ins and outs of the market, current trends, historical context, and more. If you're holding your breath, waiting for the market to crash or interest rates to go back down, then you might want to stop before you pass out. It's still a really good decision to buy a home, especially if you're going to be in your home for a few years, usually 3 to 5 years. Even if you did have to move sooner, I'm sure you could rent your home and turn it into a good investment for you. What are your thoughts about these myths in today's market? Comment below, or if you have questions, feel free to call, text, or email me, or use the link below to schedule a Zoom call. If you found this helpful, please like and subscribe so that I know to keep making more videos like this. And if you liked this video, you'll want to check out this one next. Thanks so much for watching.